Hello, I'm Andrew Ward from PwC's Corporate Liability Management team. As part of the launch of our 9th survey of discontinued insurance business in Europe, I'm delighted to be joined today by Dan Schwarzmann, who's Head of Client Markets at PwC, and Paul Corver, Chairman of IRLA and Head of M&A for UK and Europe at Randall & Quilter. Gentlemen, welcome. Paul and Dan are going to spend a few moments with us today talking about the status of the run-off market across Europe, how it's evolved over time, and perhaps some predictions for the future. Dan, if I can ask you first, what's the key market activity that you've been seeing over the last year?
Thank you, Andy. I mean, we're very fortunate, Paul, just like you, we're very fortunate that what work we're doing with our clients is a reflection of what's actually happening.
Sure.
And what are we seeing? We're seeing a lot of focus on Part 7 activity. So we've been very fortunate to be involved in what is the largest Part 7 for a long time, the Hartford Part 7. The other thing that we're seeing is much more focus on employers' liabilities. So we're doing the insolvencies of many, many books that have got employers' liabilities in them.
Yes. And
we've been saying for many, many years that as soon as those liabilities begin to get more and more stable, there'll be more transactions in that market.
Okay.
And it has become much more stable for a number of reasons, including, for example, litigation. That's created a lot more certainty with employers' liability. So I think we're seeing transactions now, and we're going to continue to see an uptake in transactions around employers' liability.
Okay.
I think finally, the other thing that we're seeing is in continental Europe. I mean, there has been activity. There continues to be activity, but I just feel more focus. We're seeing it in a number of countries, in particular probably Germany at the moment. Yep. But again, I think there'll be much more focus on that now and going forward.
Okay, Dan, thank you. Paul, we're 9 years into publishing our survey. There have been a lot of changes in the run-off market over that time. How have you seen things develop?
Well, certainly from the IRLA perspective, 9 years survey, now 7 years chairman, IRLA has changed significantly over that period. We now have a much wider membership since rebranding to be IRLA from the Association of Run-off Companies as it was before. We're now attracting more members from live companies who are managing legacy in-house. And I think part of that is the focus on large companies such as QBE and Munich Re, who now have dedicated in-house run-off units. They want to skill up. They see run-off as an embedded part of the insurance cycle. It's no longer in the back cupboard.
Yes. Okay, that's great. Run-off's here to stay, evidently, but what are the challenges that you see companies facing both in Europe and the UK?
I think a key challenge is with the regulation. In the UK, Dan's alluded, there are a number of Part 7s going through. We're doing 3 at the moment within Randall & Quilter. There's no doubt the regulator is overworked, under-resourced, and they have got a stockpile of transactions to process. Now, that is obviously delaying the businesses from achieving what they want to achieve. But it's something that hopefully will be resolved when we get into 2016 and beyond, as the pressure perhaps to do reorganisations ahead of Solvency II passes forward. In Europe, the regulatory challenge is more on the ability of the regulators to fully understand and appreciate the directives that are there for insurance business transfers, especially cross-border and cross-border mergers. We're looking at a number of those and are assisting the regulators in understanding that process in order to effect the business transfer.
Okay, thank you. Dan, as we enter this Solvency II age, what are your predictions for the future of run-off?
Well, one thing's for sure that I'm absolutely definite about, which run-off liability is going to grow. Okay. I mean, Paul, you've already said the membership of IRLA is growing. Totally understandable. It's going to grow. Why is it going to grow? It's going to grow for Solvency II reasons, as people focus much more on their capital. It's going to focus because we're seeing a lot of merger activity between live companies. Yes. We're seeing that at the moment, and as they do that, they're focusing much more on what books should go into run-off and then how to deal with it. Again, Paul, you've said that companies are creating centres of excellence to deal with books of business and run-off. We're seeing that happening. As a result of that, we'll see much more activity around disposals of books of business and run-off. And I cannot go through a presentation without talking about schemes of arrangement. Yeah. Where will we go with schemes of arrangement? We'll see innovation, continued innovation. I mean, one thing in this market, we've seen a lot of innovation. So the Orion scheme is out at the moment, and it has got an innovative twist to dealing with a scheme, which you could see being used in a number of ways. So we'll see much more around that. And I think we'll just see more creative ways of creating certainty around books of business run-off. Let me give you a quick example. Members voluntary liquidations, I don't like that term.
Yeah.
That is just means solvent liquidations. That is another tool that could be used to close books of business in run-off. You might see that or similar techniques being used if that is what the stakeholders want.
Thank you, Dan. That's great. It's fascinating to hear, Paul, that Dan thinks there are going to be more transactions in the market. I think that's really being supported by our survey results this year. How do you see the future for the run-off consolidators and perhaps the attraction of new capital into the market?
The future's definitely bright. We've got a very healthy pipeline of transactions. We know a number of them are out for open tender, so that means there's business there for the other consolidators. As for new capital coming in, I think that really depends on the health of the economy generally. There's been interest in it because of the good returns from runoff. But with the economy strengthening, interest rates potentially rising, is that new capital then going to look into its more traditional areas and move away? But I think certainly the interest in runoff is there, and there will continue to be capital providers supporting it.
Okay, Paul, thank you. Gentlemen, just to wrap up today, perhaps some final thoughts. Dan, if I can come to you first.
No, I think, Andy, we've covered the key points in this session. I would just say, run-off has always been an exciting area. It will continue to be a very exciting area. We'll continue to see innovation, and we'll continue to see creativity.
Thank you, Dan. And Paul, some final thoughts from you?
I think really just to see that proactive run-off management is on the agenda of most of the companies, and that will continue to be the case, whether that's done in-house, whether it's outsourced, and there will be challenges to address the ongoing transaction activity across Europe, but they're ones that we look forward to taking head on.
That's great. Paul, Dan, thank you very much for your thoughts today. Much appreciated.
Thanks, Andy.